Looking to invest your money wisely in 2024? Here are some of the top investment picks. First on the list is renewable energy, an industry that continues to grow rapidly. With the extent and impact of climate change continuing to grow, the shift to renewable energy sources has become imperative. Growth in the renewable energy space is set to open up a myriad of new and promising avenues for investments. There are many long-term opportunities here to take advantage of. For investors, this could mean more under-the-radar investment options, something to help diversify their portfolios into the much-talked-about ESG, environmental, social and governance, space. Next up, consider investing in artificial intelligence, an innovative technology set to reshape various sectors. AI may be the next big thing to generate massive wealth in the stock market. The far-reaching potential of AI is exciting, and there are numerous business applications for AI. With all that potential, some investing experts are tagging AI as the next big thing in the technology market. There is more than one way to position your portfolio to benefit from the continuing AI revolution. You can invest in companies that build AI hardware, develop AI solutions, or sell AI development tools. You can also invest in companies that use AI to make better products, improve their marketing, or create efficiencies. If you invest in AI in 2024, keep a semi-long-term view with those holdings. Give yourself a 5-year timeline, and as always with investing, be ready for some volatility along the way. Another promising investment is healthcare, as the demand for quality medical services is only going to increase. According to a 2024 Health Equity Outlook survey, approximately 50% of leaders surveyed expect to increase their investments in health equity, and 80% said that health equity will be in their top 10 business goals for 2024. We are on the verge of a new era in healthcare. Attractive valuations, numerous medical advances, and positive long-term demographic trends have put the sector into a position of unusual strength, with the potential to reward long-term investors. In the wake of recent underperformance, healthcare is entering 2024 with compressed valuations just as innovation picks up. No matter where U.S. markets are headed next, the healthcare sector can offer a combination of defensive and growth characteristics that may be an attractive investment opportunity in a variety of scenarios. Next on our list is e-commerce, a sector that has boomed in recent years and shows no signs of slowing down. Bain & Company estimate India's e-retail market to increase up to between $150 to $170 billion by 2027, suggesting a 25% to 30% annual growth and a market penetration to 9% to 10% over the next few years. While general consumer behavior has stabilized, e-commerce spending is expected to continue trending up. With fashion, personal care, and grocery generating greater profits, the retail industry is on track to undergo rapid growth potential. The goal for prudent investors in 2024 is to smartly engage with top e-commerce stocks, which are likely to benefit from the industry's steady expansion. If you're looking for long-term growth, technology and software companies are a smart choice. Over the past 10 years, the technology sector has enjoyed stratospheric performance. Technology mutual funds averaged an annual return of around 15% over that period, outperforming even diversified large-cap growth funds of around a 12% average. You can't even match the tech funds category with a typical S&P 500 index fund, the popular proxy for the broad U.S. stock market, which also averaged about 12%. Investing in electric vehicles is another great option, as the world moves towards greener transportation alternatives. Climate change has become an unavoidable part of the landscape. Against this backdrop, there has been a rise in interest in electric vehicles among U.S. consumers. EVs offer a direct way for citizens to reduce their carbon footprint. Allocating a portion of your portfolio to EV stocks can both aid the transition to zero-emissions vehicles and potentially boost your portfolio's returns. However, as a breakthrough technology, many, but not all, of the leading EV companies are growth stocks. Some of them are years away from profitability, carrying risks for investors. Be wary if any of these companies show decreasing sales for more than a couple of quarters, as that will likely have a negative effect on the stock price. Real estate remains a reliable investment, especially in expanding markets. Rising interest rates and the higher cost of borrowing was a headwind, However, many segments of real estate investment trusts, REITs, continue to show strong fundamentals and supply-demand dynamics. Recent areas of opportunity for real estate investors have been found among shopping center REITs, data centers, senior housing, and manufactured housing. Commercial real estate supply and demand dynamics remain generally favorable in 2024. Moreover, in most parts of the real estate market, REITs' balance sheets remain well positioned to weather the current market environment. After a volatile couple of years, investors are optimistic about the potential for a calmer year in 2024. Given the strong fundamentals and compelling long-term drivers among certain REIT subsectors, the coming year could be constructive for patient real estate investors. Consider investing in emerging markets, such as India and China, for potential high returns. Markets around the world perform differently at different times. As an investor, if you have a diversified portfolio spread across different geographies, you allow your money to deliver better risk-adjusted returns. International investments offer a plethora of new opportunities. Investors with an appetite for differentiated investments can leverage geographic diversification to participate in different pockets of the market. Research shows that adding international stocks can help reduce volatility in your portfolio, protecting against risks specific to any particular region. Your returns may also benefit from the exposure to faster-growing segments of the global economy. Once you learn the ropes of investing globally, you can look at increasing your investing exposure. Cryptocurrencies, like Bitcoin, have shown significant growth and could be a worthwhile investment. Cryptocurrency is an emerging area with more than 22,000 crypto projects in existence as of June 2023. For many investors, exposure to spot market prices has been risky and/or lucrative enough for their first forays into crypto. However, as the industry matures, investors are starting to see ways that can earn passive income on their holdings. This strategy can help top up gains or hedge against price risk. Lastly, diversify your portfolio by investing in gold or other precious metals to counter market fluctuations. Precious metals are one of the most useful alternative asset classes for investors looking to reduce their exposure to stock market volatility. Precious metals such as gold and silver are physically scarce, chemically unique, and useful for industrial applications. For these reasons, they're an excellent long-term store of value. Precious metals enable you to take the first step towards diversifying your financial portfolio, protecting your assets, and preserving the purchasing power of your dollar for many years to come. Whether you invest in bullion bars, coins, or precious metals-backed exchange-traded funds, ETFs, gaining exposure to gold and silver safeguards your wealth when the value of the dollar declines. Smart investing is all about reducing risks while maximizing returns. The trick lies in the diversification of your portfolio with some stable assets, balanced by fast-growing securities. With a judicious mix of securities in 2024, you have a good chance of multiplying your returns while taking part in exciting and fast-evolving investment avenues that offer a wide spectrum of wealth opportunities.